You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the Option Block, a little program we like to think around here is everyone's favorite bi-weekly source for all things options related, a little bit of options education, some what's trading, a breakdown of the markets, of course, a lot of unusual activity. I know you guys love that, as well as some strategery, some of your listener questions appearing into the future, mix it all together, and you have the delicious stew that is the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. 15 programs for you guys to download, stream, do what you will with, including 500-plus archived episodes of this fine program, the Option Block. The easiest place to find all of that goodness, of course, the mothership, the flagship, theoptionsinsider.com. While you're there, of course, we have a lot of great articles as well. We're not all radio here. We do a lot of radio, but we're not all radio. We have articles, breaking news on the options market, all that unusual activity we're always talking about, a lot more of that on the site, as well as education, a lot of other cool stuff. You can find it all there on the site. And, of course, if you just want to mainline the audio, you can always find it at iTunes, TuneIn, and Stitcher, Google Play, pretty much wherever you find your favorite podcast programs, including, of course, our favorite, our mobile app. They're available for iOS, Android, and the ever-popular Fire OS. And joining me on the program, let's go in order of proximity today, reverse proximity the way we normally do, where just usually I go far out and I dial it in. Today we're going to go really, really close to the vest and start off. I'm pleased to be joined in the studio once again by Mr. Todd Rich, the president of Option Monster Media. You get like the pride of place. You're like a foot to my left. Welcome back to the show, Mr. Todd.
Thanks, Mark. It's exciting to be here on a exciting or not so exciting Monday afternoon in August.
Rocking and rolling out there. There's so many things to get to. But before we get to that, let's also welcome on my other cohorts, my partners in crime. Somewhere in the middle here, between Maine and Chicago, lies a sleepy little hamlet known as St. Charles, Illinois. And from there, we are joined by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. Somewhere in that vast distance between here and Maine, you throw a dart, you hit St. Charles, and that's where it is, that magical place. Uncle Mike, welcome to the program, sir.
Always happy to be here for broadcasting live from the sleepy little hamlet.
Yeah, I think you can definitely say you're the first person to ever do that, and probably the only for the foreseeable future. Not a lot of live programming coming out of sleepy St. Charles. And then we move ever farther down the map to the place where it says, "Here be dragons." Then we go past that even to the land known of mist and shadow of known as Maine, where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi, who's taking a break from his lobstering and his crab fishing and all the other fun stuff you do up in Maine just to join us on the program. And again, he did schedule the internet for today. He's the one guy using the internet in Maine today, so he kind of has to use it. It's on the schedule. Mr. Rock Lobster, welcome back to the program, to you as well.
I'll tell you, it is lovely being here, being the only person using the internet in Maine today. It was so quiet, though. The market was so quiet. We could have squeezed two people. You'd
be willing to share the bandwidth. Nice of you.
Yeah, I don't think that would be too bad of an idea. We had kind of a nice rainstorm, so they brought some rain to us this last 24 hours. So.
Speaking of sharing, there's going to be some more sharing going on in the Greasy Meatball household as we congratulate Mr. Greasy Meatball himself, Mark Sebastian, kid number 2, Valentino. Old school name, I like it. Valentino Sebastian. So welcome to him, and congrats to the whole Greasy Meatball family there as we welcome yet another player into the fold. And speaking of things we're going to keep on rolling to, let's roll right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, that music means it's time for the Trading Block, the portion of the program where we break down all the legions of things that were rocking and rolling and lighting it up in today's market activity. An unbelievable bevy of things to talk about today. Of course, most of the major indices pretty much closing unched, almost exactly unched in some cases. I think the Qs were a cent or two off of being exactly unched on the day. S&P off a couple handles. Most of them just fractionally unched on the day, pretty much. Good old VIX cash taking a nice inhale on the day with it closing up north of the 12 handle again. So we're back into the 12 handle range after vacillating for quite some time in the 11 handle range. Some people, I'm not sure, I think you said it might flirt with 10, Mr. Rock Lobster. I think your counterpart over there was actually picking a 10 handle on our other program, the Volatility View Show. So far not coming to pass. A little bit of vol coming back into the market right now, about 12.32 out there in VIX cash land. And since we're talking VIX cash, we'll start out there in the Duchy of Maine. Mr. Rock Lobster, what caught your eye in today's activity, and what was lighting it up in ye old pit chat today?
Lighting it up, I guess, is it's a
relative term.
The Duchy of Maine is more exciting than the equity market right now. We got actually a pretty fair markup today. I think VIX might have been up like 2 points or something today at some point. So it's almost like market opens and then sells off like 1/3%, if that, and everybody's looking for the next drop, and it doesn't materialize. What was the high today was 1302. So from like a 1229, that was a pretty big markup. So it's one of these things where what is it? Oh God, remember Red Fox and Sanford and Son? You know, he'd always grab his chest and he'd say, "I'm coming, Elizabeth.
It's
I'm
the big
coming."
one.
Yes. Okay.
That's a reference that no one under 50 on this. I'm surprised I get it. So no.
I know. He was
about a decade before my time.
He was quite awesome. However, they don't even make good TV anymore. But that's kind of what it feels like every morning. You have the sell-off, and then, this is it. And I think we're in basically equity buyers, equity holders, whatever. You've got, the well-publicized, so much, there's negative debt floating around, which is, I still think, insane. And you've got one camp that's saying, okay, equity prices can stay up here because this whole rate thing doesn't matter. I can't believe it doesn't matter, but yet it doesn't matter. And that camp thinks that equity prices could rise. The S&P 500, what is it, yielding 2.5%, which doesn't look too bad relative to negative interest rates. I mean, what's the real interest rate on the S&P 500 relative to, what you can get in some Scandinavian country or Germany? It probably doesn't look terrible. But you have to pay what Tusaw would say is near all-time highs for equities. And on the flip side is, okay, this negative interest rate thing is going to end really badly once the whole QE regime ends. Japan stops doing their thing and Germany stops doing their thing and the EU stops doing their thing. They're going to crush equity prices 20%. It certainly could do that. And that takes you down to what, 1,800? Those are kind of the levels we keep seeing when the equity market falls apart. The end of QE seems like it's worth about 20%. The end of China as a growing economy seems to be another 5-10% at least here. And I think that's what people are waiting to happen. And it just somehow it just continues to not happen. So what we've got is, I think, when you have two equal but opposite forces that are butting heads, generally that means the volatility goes nowhere. And I think that's what we have. So, in my mind, I think you basically do dopey things like you buy long-term puts and you buy the SPY and you just say, forget about it. I still think the Qs are, is as much as they have run, it's probably still the best bargain, or some financials or something in oil related still, because those are still, again, they yield huge dollars and they're not very expensive. The financials, it's not like they're trading at a 25 PE. They're like 11 or something. It's just, they're not very expensive. Again, they're priced like nobody knows what's going on with the goofy interest rate thing. So, but the cost of protecting, an equity position in JPM and just buying JP Morgan is just, it's not that expensive. So are those the things you do? I think short-term is really hard. If you're a short-term juice guy that likes, to trade some volatility, it's just not there. So it's very hard to make money. But when you're into the long-term put buying and underlying buying, that's when I'm kind of, as a vol trader, I'm sort of running out of ideas, and that's kind of where I'm right now. So I just buy some stocks and I'll buy a bunch of puts and we'll see what happens. And if the market just decides to make an all-time high, I'll end up making a little bit of money, and that's and that's all we really have right now. So that is what we've been talking about in the pit chat. Just watching stocks like AT&T are down about 10% from their highs, at least for the year. Some of those big dividend-paying stocks that I think help drive some of these equity valuations. So without that kind of leading sector, it's hard for us to take off. And I think that's where we find ourselves, in just sort of I don't know which way to go mode. And that's we're looking at a 12x that in February you would say no way we even get below 15 this year with all of the stuff happening. But none of the stuff ever happened. Nothing happened in China. I don't know if the bureaucrats are that good at hiding stuff, but nothing's really happened. Their equity market volatility is at zero. Nobody's buying it. Just it's going nowhere. So nothing materialized. And after a while, everybody's like, okay, it's going to happen. And then it doesn't happen for a while and people forget. So
forgetting the schizophrenic nature of all vol traders out there. And you're right, Brexit happened for like a week and a half. Then it kind of stopped happening. Yellen and the Fed seem to happen for a few days every month or so. Then people forget. And you're right. So the short-term nature of the market. Speaking of forgetting, we have a big anniversary coming up in a little bit. We'll get to that in a little bit. Going back to what you were saying earlier, Mr. Rocklofs, I neglected to mention, you were talking about that ever-dated reference to Sanford and Son. And today I actually approach 1 year closer to understanding that reference, because today is my birthday, and I'm actually recording the option block on my birthday. That just shows my level of commitment to the listeners, lest they missed a program here in the action-packed time of August. I still go on. I still record for them. So maybe, who knows, maybe in a few more birthdays, Mr. Rock Lobster, I'll get all these references you're throwing my way. You got a honeymooners one ready for me as well?
Hopefully you're going out to dinner with your lovely companion, who shall we name nameless, her name anyway. But
there will be a dinner. There
was
a dinner yesterday. There'll probably be a dinner today too. Why not go for two? Why go for one when you can go for two? But there's so much action. Lighten it up today. I can see Todd here. He's just chomping at the bit. He's like grabbing my hand away from the microphone. He's like, let me talk. For the love of God, man, let me on to the show. There's so much to say. So there you go, sir. The floor is yours. Have at it, Mr. Rich.
because there's just so much to talk about.
So much.
But I'm actually going to concur with Andrew, and we're actually seeing it a bit at Option Monster. We do have some scanning tools. We are seeing some of the unusual behavior where people are stepping in. And when volatility is this low and we're going into some uncertainty with what's coming up, who knows what the Fed's, they're trying to keep us on our toes. They're trying to broadcast that they might do something this year. We've got these crazy elections. No one knows how that's going to roll out. And so what we're seeing, and that's why you saw it play out today in the VIX popping a little bit, is people are doing some put buying. They're shopping for some very inexpensive protection, whether it's protection or whether they're taking a shot to the downside or just going and saying, hey, I'd like to be long a little bit of all. It is an interesting play when, they always say never short a dull market, but I don't think we're going to be dull for that much longer. Labor Day is coming up, and I think people right now are sort of getting in front of that a little bit and saying, hey, vol's cheap, insurance is inexpensive, let's go ahead and pick some up. So that's what we're seeing over at Option Monster. That's where we've noticed some of the activity, and it's been a little broad-based, just nothing particular that I want to call out, but we saw it, across the board in different places.
So a lot of degenerate juice buyers, just like in their land of option pit over there. Everyone out there buying juice left, right, and center, buying puts, willy-nilly juice buying. Uncle Mike, save us from this put buying bonanza. Tell us your tales. Regale us with stories of blasting out teeny puts, sir. The floor is yours.
All right, that is my Bing Crosby for the day.
So you're going way back. You're trying to confuse me with even older references.
Yes, buy a bond. That's the one thing that actually is kind of lighting up the tape today. People are buying the treasuries at this point right now. TLT is up almost 1% on the day. And we had mentioned on the show that anyone can do a show when we have an exciting market. But by gosh, this is the option block. We'll do a show even if they stop trading for a few days and still make it a great show. So the combination of... let's see, we have a dull market, so to speak, but there is buying in the bond market. So granted, I think you guys know me, I am a bull, but we still have not seen much of a drop in the bonds, and I'd like to call attention to that for everybody. The other thing that I saw that was lighting up the tape today, of course, oil. Just with that, with oil being down almost 3.5% on the day, combine that with XLE being down a little bit over a percentage point, that's pretty much where most of the action is at this point. What's going to be interesting to see after Labor Day, once people get back from either the south of France, Maine, or St. Charles, wherever it is that people always do their vacationing, it'll be interesting to see if we have an energy leading rally of some sort or an energy leading downturn, because the fact that oil is knocking on the door of 50 again still hasn't been able to break through it, but it has had a tremendous run over the course of the last few weeks, and it was down at 40. So that's what's lighting up my tape today. But aside from that, I think we have, just like you put it, Mark, a lot of things are flat on the day. Some things are exactly flat, and we did have a 10-point move in a 10-point range today in the S&P. So there was some things going on today, but really from start to finish, not a lot. I would just say oil and bonds at this point. So slippery borrowing today.
Slippery borrowing. I think everyone's buying puts, and I think Vol's getting a little bit of juice today because everyone's starting to remember, oh, yeah, they're looking at their calendars and saying, didn't something happen almost exactly a year ago today? Oh, yeah, that's right. The entire market got a good chunk of it wiped out and then gave a good chunk of it right back. And that set us off on a very tumultuous path for the months to come. Of course, I'm referring listeners to the flash crash, mini flash crash, call it what you will, aberration outlier on August 24th of last year. That's where we saw the Dow pretty much open up down nearly 1,000 points, and before regaining most of that. The Dow never got back to those levels. S&P and NASDAQ did kind of threaten some of those back in the bottom of the trough there in February, when China and everything else was really giving the market a lot of 1-2 punches on a regular basis. And of course now, since then, and then subsequent 6 months after that turbulent February period, we've seen the markets rebound, setting new all-time highs on an almost daily basis. So who knows? Perhaps that is perhaps contributing. People do like an anniversary in the markets. They like October and Rocktober for all the things that have happened then, and maybe August now will be on the horizon as well. One thing that was certainly on the radar today, though, one of the few things that was moving yet again, we can't get a break from this one. It certainly seems like our listeners don't want us to take a break from this one. It's Valiant rocking and rolling yet again on a day when the S&P was almost literally unched. The Qs, I think, actually were literally unched, or about as close to it as you get. Valiant continuing to just rally ho, up nearly 9% at the end of the day today, up about $2.50 over the 30 handle. Now about 31 and a quarter to close the day or so up there. So yet another just rock'em sock'em day. They confirmed they hired an executive for their new CFO. And apparently the market liking that news, rocking and rolling Valiant. This name has been averaging of late about 100,000 contracts a day, doing nearly 250 that, so about 2.5 times that level today, about 1.5 to 1 calls over puts, which is probably what you'd expect on a day when a heavy bias to the upside. We're seeing they're pricing in about a $4 move out there in the SEP straddles. That works out to about 13% today. So it's pretty juicy, but given how this thing's been moving, perhaps not juicy enough. I don't know, Mr. Rock Lobster, any thoughts given over there in the pit chat to either the impending anniversary or perhaps the gift that keeps on giving, that is Valiant?
The pending anniversary is, I would say, a lot of the ideas that we kind of generate in option pit tend to leave us with leftover puts from spreads and stuff like that. So it's always nice to keep a couple of those around. The next part would be for Valiant. I think we talked about this, a week and a half ago, maybe. Just they sold the vol down really low. I think they sold the volatility down to 55% in September, and I'll bet you it's in the 70s today. Oh, look at that.
It's about 61 today.
61. So it's moved. Actually, they took it in on the rally, but again, an 8% rally in the underlying equates to over 100% volatility for the day. So volatility in there, I'll just say it is still too cheap. Sell it at your peril, because the thing is a story. It's still a story. It doesn't go away. And again, a year ago it was worth $280 or $60 or something like that. And they have had all kinds of problems. So it's still down, 85% from the highs or something like that. Pretty huge amount. I don't expect it to go back up there anytime soon, because I think the way they charge for all their drugs and stuff, that all is going to get reworked. But they still have a lot of assets. So the value of the company is probably more than it is, but that makes it a volatile story. So I don't think that volatile story is going away anytime soon. 2 weeks ago, I said buying puts in stock is a good idea. It's probably the same in here, because it's just, and you just have to do stuff when it moves. If it drops a bunch, buy some stock in against a position or sell some puts out. And if it rallies a bunch, you just unwind your stock or sell some calls against it. So I think at least that is moving, and they're still giving you a volatility at not very expensive prices. So I know the vol was higher yesterday, and has been higher every time they talk about somebody, a white knight or somebody buying part of the assets or something. So that's where you go. But I would say just be careful. You could probably sell the 20 level puts in there and not be too worried. I think the OCT20 puts actually have a bid. Yes, they do. The OCT20 puts, which are $10 out of the money, you could probably sell them for 40 cents. And you could buy the year lows or close to the year lows in the stock. The OC 15 puts are still, you can probably sell for a quarter. So those are all, right around year lows. If it goes bankrupt, again, I guess that would make, what's the hedge fund guy, Ackman, the one that owns so much of it? That would make him really wrong.
Yes, that would not sit well on his balance sheet by any means. I know, Todd, pretty much every firm out there, VRX is one of the few shining lights for them from a volume perspective in the summer doldrums here today. Anything catching your eye over there in Option Monster? And what's any of your clients? Is this one? I'm assuming you guys are like everyone else out here, where this is one of the few things your clients are really aggregating around these days.
Well, people are definitely asking a lot of questions, and rightfully so. When you've got a very dull market with very little volatility, and this is it's like parakeets. There's a shiny object, VRX. It's the one thing that's swinging around with crazy moves. And as Andrew just mentioned, it bottomed out around 20. You're seeing it makes a 50% move higher. Now I think it's right around the 30 range. And people they want to look at it and they want to get in where the action is. We've generally have discouraged our customers over at Option Monster from getting into this news story, because it's entirely news related. You really don't know what the next piece of news, whether it's going to be positive or negative, and it's there's probably slightly more conservative opportunities out in the market where it's I don't need to be throwing dice or flipping coins. I think today you probably also saw a little bit. I know Andrew sort of intimated at it, but we saw some activity in the pharmaceutical industry with Pfizer coming out and making a $14 billion purchase, and you've been seeing that's been the story this summer. It's either been earnings related or it's been around a merger or an acquisition. And so on a day where Valeant makes potentially some positive or encouraging news with some new management, and then you get a double whammy where Pfizer throws you a little bone into that space and starts throwing some money around, and you brought people in. But one of those things where it really is, it's kind of crazy. Rather tend to avoid it.
Yeah, I can certainly see that. So we didn't avoid it last week. Our question of the week, where we asked you guys out there at the time, Valeant was a mere $26.66 as of a week ago. It was up 7% that day as well. So go back a week or so, and it's pretty much up about 10 handles since then. The implied vol was 63. The historical vol 30 days was 99. We asked you guys, looking at 1 month, what would you rather do? Would you rather buy calls, buy puts, sell premium, or never touch it with a 10-foot pole? 34% of you coming in on the buy calls tip, whereas very close on the heels of 32% saying you would never touch VRX in a million years. 19% selling premium, and 15% going the old buy premium, buy some juice, a.k.a. buy some puts route. So interesting stuff. Speaking of interesting stuff, it's time for us to get to some more. It's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky music means it's time once again for the Odd Block, the portion of the show where we break down what's going on the darker side of the options market, the shady, the shadowy side, the dark alley your mother told you not to go down. We go down that on this program. We find some interesting nuggets every now and then. Starting off here in the land of an old familiar face of mine. This was out in the IBM pit when I started on the SBUX. Good old SBUX. Of course, that's Starbucks, ticker symbol SBUX. Closing today, $55.85, up about nearly a buck or nearly 2% on the day. It's a name that does about 28,000 contracts a day, so a decent mover from an odd block perspective, where we talk a lot about names that do 200-300 contracts a day. So this one's fairly active, doing 81,000 contracts today, really lighting it up, about 5.6 to 1. calls over puts. That should give you some hint, listeners, of to where our eye was drawn out there in good old SBUX. If you want to find it for yourself, you got to scroll all the way out to October, where our eye was drawn. Our net was cast at the October 57. Actually, those strikes are funky. 57.5, 60 call vertical. We saw it going up on a bit of a ratio. Looks like paper coming in and selling the 60s, and then I think buying the 57.5s, doing that about 10,000 times by about 4,000 net on the day of actually I'm backwards. Excuse me, I'm doing it the wrong way. 67 selling the 57.5s for initially about 10,000 by 4,000. Total on the day about nearly 13,000 by about 5,600. Size open interest on both of these strikes, about 8,500 by about 14,500 on both of those strikes. So size paper up here as in good old SBUX. Again, we have to check the open interest to be sure it doesn't really line up exactly with what we're seeing out here in the OI. But looking back at the last few months out here in SBUX land, this thing is a wee bit south of where it once was. It was trading in the low 60s not that long ago, back in April. Now we're in the mid 50 handle, so perhaps someone taking advantage of that retracement to adjust some calls to a wee bit more relevant strike. Mr. Rocklops, I know this one, you've been kind of picking this one apart today. What are your thoughts here on what's actually cooking out here with these ratio verticals in SBUX?
When was the last time you saw a ratio vertical where they buy more of the lower strike and they sell less of the upper strike?
Yeah, that's why I was kind of had to do a double take on this one. I want to make sure I was looking at it correctly, because I thought maybe my write-up was wrong at first, because I was like, wait a minute.
I know.
That doesn't
kind of
compute.
Goofy. Yeah, and it was marked spread, so confusing. Now, a bunch of the no 57.5s went up later. It is possible, but again, that looked buying as well. It was a very, it was just a lot of kind of strange paper. Although the OC 57 trade, what can you say? It looked buy, and it looked like somebody wanted to roll down and double up. That's certainly possible. So again, without knowing if they have stock or not against it, it looks like they want to own these OC 57.5s, which, right now, buying juice is it's a very hard trade, but maybe they think Starbucks is going to go back to their highs. It again could be a little roll, but those 57.5 calls, the vol actually was flat on those things. So a lot of strange paper, but it looks strange yet bullish. And Starbucks basically hasn't done anything for 4 months, 5 months, nothing, same spot. So I guess somebody's thinking when nobody's worried anymore that all this stuff's going to rally and they're going to make a lot of money. So there you go. So strange. Just again, odd paper.
Strange but bullish. I think you just described Uncle Mike Tusa in a very, very concise way. He's going to take umbrage.
Hey.
I knew that would wake you up out of your slumber there, Mr. the Ever Bull, the Perma Bull, getting him to chime in on the old odd block. Take some more, listeners. As we move on to another name here. This is, not Marvel, not the cool stuff, so you can't sell calls on Captain America and that kind of fun. So if you want to do that, you got to do the big conglomerate that is Disney. Unfortunately, instead, this is MRVL, MRVL Technology Group, ticker symbol MRVL, closing today, $12.43, one of the few rays of sunshine on the board today, up about 2.3% on the day. This is a name that does about 5,200 contracts a day, so fairly decent paper, again, from an odd block perspective. Doing today about 15,000 contracts, a tick shy of that, about 11.3 to 1 calls over puts. That tells you what we're looking at, and pretty much to find that activity, you got to scroll on out to SEP. In particular, it was the SEP 12s, as well as looks like the 12 halves going up today. Started off with about 1,700 of the SEP 12s going up. Looks like paper selling for about 71 cents, total of about 2,000 and some change on the day. All that on 1,800 contracts, open interest. That also went up marked buy right, so we did see some stock going up with that. Paper lifting the offer on some stock to the tune of about 105,000 shares. That's roughly delta neutral. So again, it could be someone coming in. There is open interest on the strike, deciding, I'm not a fan of these anymore. I want to close out my trade and take my ball and go home. Interesting as well, we also saw a similarly sized paper, one strike above, or I should say really a half strike above, the 12 half calls going up 2,300 times as well, followed by the SEP 13s also going up 1,834 times. All that paper, and of course, no open interest really to speak of in either of those strikes. All of that, Mr. Rock Lobster, going to lead me to say that this is probably opening, certainly on the 12s perhaps, as well as on the 12 halves and the 13s. Maybe this has the whiff of institutional paper that likes to just decide on a strategy and then just blast out multiple consecutive strikes. Could be indeed our old friend, the stupid, rearing its ugly head yet again, or perhaps just another funky. It's not a typical ratio of a fly or anything like that. So what do you think, Mr. Rocklaps? We got ourselves some stupid action out here in MRVL today?
I think it almost just looks like there was a close. I mean, would you open a position? I know what we want to do and what other people want to do are two different things. But would you open a position by selling the SEP 12s and buying stock delta neutral?
Again,
would that be
the number of these odd block trades that I would do myself is a very, very small percentage.
I mean, you would definitely have to say, okay, that stock's not going anywhere because I'm going to sell that straddle for nothing. So I can only assume that that's closing unless somebody has got a real axe to grind. So that's that part of the paper, right? The kind of what looks like very much like closing the 12 strike. And then there's paper just buying the 12.5s and 13s. Actually, the vol's up on a day when vol really didn't do a whole lot in most places. On individual names, they took the vol up in MRVL a little bit. So it's feeling like somebody's closing a trade they might have had because the stock actually is up from 10 only about a month ago. Now trading 12.5. So, if they had some kind of ratio on, it's probably getting a little close to where they want to take it off. And then they're piling in here to the 12s and 13s. So I don't know. Call me crazy. Call maybe some takeover speculation. I do believe there's some kind of semiconductor fab type thing or fabless semiconductor provider, which, some of those companies are, their people are looking at them. So, who knows? Maybe there's a little takeover spec on this one. But I just found all of the buying, all of it essentially just very unusual for kind of a sleepy little technology company that's not doing anything.
It has been moving a bit, though. I mean, it moved since June. It's up about a third. It was trading in the low 9 handle back in early to mid June, and these days right around the 12 half level. So it has been rallying hard of late, including a big gap up right before earnings back in early July, about a handle or so. So obviously our friend here thinks the party shall continue.
I think somebody's thinking there's a little bit more party to be had in the name, and all is when the stock's made that big of a move, it's not something you necessarily want to get in the way of. So maybe the call, maybe Mr. Straddle seller he's just closing. He's saying, I'm just going to take my chips and I'm going to go home, and other paper rolled into the 12.5s and 13s. Just lots of kind of busy, scattered paper all about in that name.
Yeah, it does have a bit of a frenetic pace to it. It does seem like the two trades are, the vertical and then the straight-up calls, they don't appear to be related, but the size is similar. The strikes are so close, you kind of have to assume they are, even though intent-wise, you're right. Kind of two different thought processes at work there, which is a bit funky. Again, that's why we like this stuff. That's why we call it the Odd Block, listeners. And speaking of parties, let's see if we can keep the party rolling into our final name, these guys are right across the street. I could throw a stone here right across the river, I should say. I could throw a stone from the Options Insider Studios here and hit them. This is General Growth Properties, Inc., ticker symbol GGP, closing today, $29.25, up about 7 cents, so pretty much unched on the day. It's a name that does about 3,700 contracts a day on average, doing about nearly 20,000 today. Pretty active day, about 3.6 to 1. Puts over calls, so we're flipping the script on you listeners, all calls all the time, until right now we get to good old GGP, and what was lighting it up today started off small, started off catching our eye with just about 271 contracts of the SEP 27 puts going up. Looks like paper buying for about 22 cents as the day went on. More size piling in. We saw a big chunk on the bats of about 5,620 of those going up. Total of about 6,210 going up on the strike. Also saw some size paper going up on the SEP 28 puts as well, to the tune of about 8,000. Both of those strikes well over the open interest of about 2,200 on each of those strikes. So large blocks going up on bats and others. Looked around, but didn't see any stock with those. So these weren't going up tied. If you're not familiar with General Growth, they're, of course, a REIT, effectively, or a self-managed REIT. So they've had some hard times of late, or they did in the past, but these in the last 6 months or so have been pretty good. They were down in the doldrums of about 26 or so back in mid-May, and again, hitting the highs in the low 30s recently before retracing a little bit down to where they are today, about 29 and a quarter. Mr. Rock Lobster, take us home. What do you think our friends are up to out here in their SEP puts in GGP?
When I first looked at this, it just looked like they were buying them. I thought that possibly there could be some rolling action, but then the volume kept going up and up. I'm at a loss for why there's so much interest in those things. Because the stock moves, but not a lot. It has like kind of long-term swings, but just, I don't know. They were buying those things. They were paying real money for them, and maybe it's kind of collar action against somebody who owns a big block of stock, because some Mach 30 calls did trade. It was all stuff that looked like it was kind of tied and tagged. Price variation stuff, which is kind of in the middle usually with stock, but I didn't see any of it go up. But it definitely looked like, put buyers, they pushed the vol up a little bit in there. But it's kind of like there's a lot of smoke but no fire. So, you're buying 8,000 of the SEP 28 puts in GGP. You're looking for, a surprise interest rate announcement, something to kind of chuck the company around. The puts closed 34 cents. And they were paying for that block 32, so they pushed them out a little bit, but just again, there's got to be a story there somewhere, but I haven't seen it.
What we have seen, though, listeners, are a bunch of your questions. So we're flipping it up. We're doing your questions on Mondays. Let's get to it with our Monday edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. Like the name implies, this is indeed the portion of the program where you guys get to take the reins with your questions, your comments, your insights. We touched on our question of the week from last week. We always like to hit on those. We just posted our question of the week for this week right before the show, so a little bit before the show. So the early voting, you still have all week to weigh in. But our question of the week, a little bit more involved. I'm going to turn it lest Todd be inclined to cheat. So we can't see the actual numbers. And instead, he's craning his neck, listeners. Look at that. He's trying to cheat. He's taking advantage of his in-studio presence. Our question of the week this week is going back to what Tuso was talking about at the top of the show, about oil, kind of crude being the story of the day. A lot of you guys like to play crude via USO. So we said, hey, USO today, right about $11 as of the time we posted. It's up about 19% in August so far. The SEP Straddle is at about 80 cents. So that puts the $10 put also about a dime, and the $12 call in September all at 9 cents. So we asked you, all that data we just gave you, what would you do? Would you sell the straddle? Would you buy the straddle? Gave you kind of a couple of combo options at the end. We said, would you buy the put / collar? So if you're either one of those, it means, of course, buy, put, sell, call. You can choose that option or reverse that, the old risk reversal. You could sell the put or you can do the bullish risk reversal. Which way would you go? So that said, Mr. Todd, I can see you craning your neck. So I'll go to you first. Before the temptation to cheat overwhelms you. First off, what is your answer? What do you think you would do given that information? And then B, what do you think is winning our poll here, our question of the week?
I'm just going to take a flyer and roll the dice. I'm going to go with someone's buying the put. Their oil's had a great run up here off of its lows, and I don't know. I think we might see a little bit of weakness in oil. So just a gut feeling. Let's go that way.
You can't see the show chat here, Todd, but they're both taking deep umbrage to the fact that you are cheating on the poll here. So
I can't see nothing.
Deep umbrage. I turned the screen, listener, so he can't see. But lest he be tempted. All right, let's turn to you, Uncle Mike. You were talking USO at the top of the show. What do you think is what is your choice, of course, and then what is winning the poll?
Well, of course, you know how they say, if you ain't cheating, you ain't trying. But with that being said, I think what's my choice, I think I'd do the bullish risk reversal. But what I think is winning, I think our audience is expecting a pullback. So I think they're going to be buying puts.
Buying puts. So 2 votes for buying puts. Mr. Rock Lobster, are you on the same inclination? You're talking buying juice earlier, or are you otherwise inclined? And what do you think is winning?
I'm more inclined. I tried to look for anything in USO to dump, but I couldn't see anything. What I think is winning is probably pullback. I think risk reversal is a little too esoteric, so I think in general people go with the easy stuff, which would be buy put, although I would be more inclined to do the risk reversal thing just because oil's going up and why is it? So I'm more of that ilk than the other. So actually I agree with Tucson on this.
Interesting.
And I'm just taking my umbrage and I'm keeping it suppressed.
keeping it deep, dark, in the dark place where you suppress everything else and then have to tell your therapist and have all sorts of issues. But let's.
Oh dear.
Let's.
Oh my, where's Sebastian when I need him?
Yes, exactly. He could probably elaborate on much of that. But lest he do that and pop up, I will now mute you. As instead, we can go on to what we were thinking. I definitely am in the same camp. I like the bullish risk reversal. You're kind of right, though. It may be too esoteric for a broad pull out. Of course, our audience pretty savvy. We've got a lot of savvy options folk in our audience who can wrap their heads around that. So that one is right now not winning with only about 19% for the sell put / buy the bullish risk reversal or do the bullish risk reversal. The winner right now, all that data I just gave you, that ATM straddle, 80 cents, that's looking kind of attractive for a lot of our listeners, apparently, with about 45% they want to come in right now and scoop up and buy the SEP at the money straddle for 80 cents, which is interesting. 27%, about a quarter, said they want to sell that straddle. And then the only 9%, so all you guys voting for buy-in puts, only 9% wanted to come in and buy USO puts here, which is kind of surprising. I thought that it would be a little bit more, a little more even keel. I guess that straddle, Todd, it was just too cheap. They couldn't resist themselves. They had to buy that straddle. Too juicy. Too cheap.
To be fair, we're half right.
Yes, of course you are. I did not specify a strike, so it could be an at the money put. I did not specify a strike. So you are correct. I gave you 50% bonus points. Todd's in here. He's cheating. He's hemming and hawing with the answers.
I didn't even cheat right.
He's mixing it up. He's really getting into it. Before he cheats some more, let's move on to a question. This is one I know Steve was chomping at the bit to discuss last week. We didn't have time. We'll get on the show this week. This comes from Natalie. Natalie L. She says, I keep receiving email promotions from an expert. She puts that term in quotes. I maybe would as well. Who says his top rule of trading is that he never buys options. Maybe it was our old friend Don Schlesinger. Andrew, options are not for buying. Natalie goes on to write, he only sells them. What is this about? Is this a reliable approach to options trading, or should I delete this guy's emails? Well, unfortunately, or I guess fortunately, depending on your point of view, this guy is not alone. There's a lot of people out there in that camp who that's their approach to options. You see the numbers bandied about all the time. I'm sure you guys are in the kind of data and research and analytics side of the space, Todd. You see this number bandied about all the time. 98% of options expire worthless. 80%. That's a hotly debated statistic. OCC will tell you one number, the number I choose to believe, which is much lower. But people are out there pushing this stuff. They tell you a much higher percentage. They say you're a fool to buy them. So this is not a small opinion by any means. A lot of people are out there holding that. So what would you say? It's also a popular approach for selling your service. So what would you say to our friend here, Miss Natalie, who's dubious about these emails she's getting?
The first statistic I'd like to address is that all these options that expire worthless. And the reason that those options expire worthless and there's still open interest in them is because someone did buy them and they can't sell them. It didn't work out. But a lot of the options where someone buys them and they make a profit doesn't mean they're going to go to expiration and take delivery of the stock. They're not going to. They might or exercise their put or exercise their call. When you buy an option and it turns into a profit, you can sell it. Right? There's nothing saying that you have to go all the way to expiration and then exercise your option. You can buy a call, you can buy a put, it can go your way, and then you're allowed to sell out of it before expiration or right before expiration. There's nothing saying that you have to let this go through the expiration cycle. And most people, if they have a profitable trade in options, do liquidate their position before expiration or roll it. So, right away the numbers get a little skewed, and I think people are missing the point there. I do like selling options. I think using options as a way to generate income is excellent. It is definitely core to my strategy of doing things. I'll sell puts to buy stock. I will sell covered calls to put to go ahead and collect premium on my willingness to sell a stock at a higher price and repeatedly do so. But buying options definitely has its place in everyone's portfolio as well. When insurance is inexpensive right now, volatility is low, we don't know what's going on. Why would you not consider hedging some of your portfolio with some very inexpensive puts? I think it's odd that people would buy car insurance, homeowners insurance, and let's take a look at your car. Your car, maybe you have a $25,000 car, and you'll spend a lot of money on insurance to insure that car. But then you might have a fairly significant portfolio, tens of thousands, hundreds of thousands of dollars, and you wouldn't insure it. It doesn't make any sense. So when volatility's down here, buying some puts is probably not a bad idea, just in case. And I'm also a big fan of the stock replacement call. All right, you could have a few thousand shares of a stock or even hundreds of shares of something like Apple, and you take a look at the amount of cash that you're tying up in the markets. If you have 1,000 shares of Apple, you might be better suited than putting all that money into one stock and tying up $100,000. You could buy 10 calls for a couple of bucks, have much less risk in the market, as long as you right size it. If you had 1,000 shares of stock and you're replacing it, you replace it with 10 calls. You don't go buy 200 calls and spend all your money on the premium. But there's nothing wrong with taking some of your cash out of the market and maintaining your long exposure with a stock replacement call. So I would disagree with someone who says options, you should only sell them. I think buying options definitely has a place in everyone's portfolio. And if, one of the ways that I actually mitigate in my own portfolio the buying of a volatility or selling of a volatility is I'll do spreads. So I'll buy a call spread if I'm bullish on something, or I'll buy a put spread if I'm bearish. Or you can even do credit spreads if you really need to collect something, because the risk and reward is always, it's all definable whenever you do a spread like that. So I would disagree, though, that you only sell options. I think buying options definitely has its place in a portfolio.
Yeah, we were just talking about it earlier on top of the show, right? Buying puts and stock, it's an attractive thing. And I agree with you, Tim. I'm a huge fan of the stock replacement, one of my favorite strategies out there, particularly in an environment like this. It's a no-brainer. So yeah, the notion that, of course, I like to sell options as well. I have no bias either way. But I think that's you want to have as many tools in your toolbox as possible. If you're just saying I'm just dark side all the time, you limit yourself to a large amount of the great strategies that are out there, and that's not something you want to do just from a general statistics standpoint. You don't want to cut yourself off at the legs if you don't have to. Mr. Rocklobster, I'm sure this one probably deeply offends you because you are a degenerate, the most degenerate of juice buyers, even though you get all your juice for free. So what do you have to say to our friend Miss Natalie, who's scared about this dude who wants her only to sell options? And apparently it's not Don Schlesinger.
I like that. Well, Don Schlesinger always had a good point. He was always said options are meant to be sold or not to be sold.
Yes, he had that extra caveat on there. It's sold or not sold.
So that is why he survived for so long. So what you have to learn is what makes an option a good sale or not. And ultimately that takes a little while to learn. And even if you sell options for great reasons that you have you think there's great edge to sell option, things can still go awry. So I just real simply is, yes, most of the time selling options statistically is a good idea. And a whole bunch of the time selling options is an awful idea. And in those times, buying options, although Don would never say it, could be a good idea, but you need to get yourself a little educated because you have to understand what's possible for a long option relative to how it decays and what the underlying's doing and making sure there's even enough directional, you're even getting enough move in a direction. If you buy some calls, you're going to make some money on them. So for all those things, I would say, number one, if you get something from an expert saying just sell options all the time, without anything to do with risk control, you should maybe stop listening to that particular person. I don't know who it is, but there's got to be some kind of risk control with any strategy, or just somebody just saying sell a bunch of stuff is kind of easy to do and makes people blow out.
What I'll add to that is that just because I've never really been a fan of that statistic that X% of options expire worthless, so you should sell options. To me, that's like saying 100% of all gas tanks expire empty, so you should ride a bike. I think it's a ridiculous statistic as a reason to sell options. Folks, there's no inherent advantage to buying or selling options. There's times you do them and times you don't, but it's like comparing a hammer to a screwdriver and saying, oh, I only use a hammer. Well, that's fine, but if you need to screw something in, it won't work. Or I only use a screwdriver. Well, if you need to pound a nail, then that screwdriver is not going to do you one bit of good. Now, if you're a hammer specialist and that's all you do, great, that's fine. But to say that only the hammer is the only tool that you'll ever need and you should never use a screwdriver because a screwdriver is just a dumb tool, it would be ridiculous. So by the same token, there is a time and place to buy and sell options, in my opinion. And if you're not very good at buying them, don't buy them. But if you're not very good at selling them, don't sell them. But the point is that there's a place for both of them, in my opinion.
Well said, sir. This Monday mail block is obviously popular because we always go long on this Monday show now, but it's cool. We got Trendy John actually really quickly. He wants to know what strikes we were talking about in VRX for the puts that were attractive. They were the OCT 20 and the OCT 15 puts. Those are the ones that Mr. Rock Lobster was mentioning. He thought looked super juicy. I think he just said if you wanted to sell them, those strikes would not be too unattractive. But unfortunately, yeah, so many questions, so much good stuff, so much good chatter that we don't even have time for the typical old school around the block. That music means we're up against it once again, or all of our listeners, I should say. So before we go, really quickly, let's instead do a combo around the block and what's coming up next. We'll start with you, Mr. Rock Lobster, because I know you got to hop off pretty soon. But what are you watching for the rest of the week, and then what is cooking in the land of the pit?
We have what am I watching? I'm just trying to see if we'll get any kind of vol movement. I don't think we're going to get anything. I think we're going to just get more of the same until we get some sort of clear thing on whatever the rates are going to go, and then the market will pick a direction. But you're going to see just more of this. And option pit, understanding weekly options on our Saturday class. It will be this Saturday starting at 9:30. So come in, join the class, and do some learning on what you can expect from short-term options.
Thank you for that, sir. Surf on over to optionpit.com to learn more. And Mr. Uncle Mike, what's cooking in the land of RCM?
Hey, just waiting on seeing maybe we can get something from Yellen in the near future this week, possibly from Jackson Hole. But other than that, just watching to see if oil can break 50 and the S&P can break 2,200. At RCM, if you are interested in working with an advisor who will work with you with options and who is fine working with you if you only have maybe $100 a month to invest, I am happy to work with you, most likely, unless you're a jerk. But with that, if that's something with which you're interested in, feel free to give me a call at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
You heard the man. Everyone welcome except jerks. If you're jerks, call up Andrew. He likes dealing with people like you. And last but certainly not least, Todd, you and I were chatting before the program, but all the cool stuff you guys are cooking up your sleeve over there in the land of option monsters. So maybe perhaps a bit of a more delicate plug for what you're doing this week, because you want people to come back in a couple of weeks and when they see all the good stuff for themselves. So don't go now. Go later.
No, we do have some fun things coming down the road, all in due course. But if you're looking for market research, analytics, some commentary, or some trade ideas, come check us out over at optionmonster.com. We've got some great tools for analyzing the markets and being able to digest what's going on out there and make you a better, more well-informed, efficient investor.
And don't make the same mistake I did, listeners. It's option singular, not options. I know options insider. I'm so used to saying options plural, options house, options everything, but option monster, option singular. So it's OPTION, monster.com. Check it out and stay tuned for all the cool stuff they have coming down the pike very soon. And on behalf of Todd and the Rock Lobster, and we gotta get Todd a nickname, and Steve as well, and of course Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and however else you listen to us, including our live friends over there in Mixler. We love you guys as well. And we'll see you next week for more of the option. Well, actually, I should say next Thursday for more of the option block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.